Hey everyone, welcome back to Corporate Decoder. Today we're diving into A10 Networks' latest report, and let me tell you, it's got a few surprises. Think of it like that time you thought you asked the test, then saw the actual grade, ready to decode what's really happening. This report shows A10 Networks is making more money, but they are also paying more for things as a result. We will dive into if it's a good thing or not. Stick around as we look into some of the numbers and what they mean for the company and its stocks. Up before we begin, if you are into decoding financial statements, make sure to subscribe and leave a comment. Also make sure to join our Discord community. There's a link in the description. A10 Networks is in the business of providing security and infrastructure solutions for computer networks. They sell products and services to both service providers, like internet companies, and enterprises, like regular businesses. Their products help these networks run faster and also keep them secure from cyber attacks. It's like having both a high-performance engine and an impenetrable shield for your data. Let's get into the numbers. Looking at their balance sheet, A10 Networks has a lot more cash on hand. Cash and cash equivalents jumped from about $95 million to nearly $44 million. That's a huge increase. Petronet securities are also up a bit, around $10 million. However, their accounts receivable, which is money owed to them, went down from about $77 million to $65 million. So they're holding more cash but getting paid less. Now, for the income statement, their total net revenue for the 3 months ended in March was around $66 million, up from about $61 million a year ago. That's good. Revenue is moving in the right direction. Their gross profit, which is the money they make after subtracting the cost of goods and services, was about $53 million, up from $49 million, so they're making more money on each sale. Finally, the net income was roughly the same, around $9.5 million, despite a higher income before income taxes. Basically, the company is doing better, but more of the money is going to taxes than before, mostly US federal and state taxes. Time to look at the cash flow statement. Net cash provided by operating activities decreased. This means their day-to-day operations generated less cash compared to last year around this time. They brought in $17.2 million versus $32.4 million a year ago. That's almost half as much. The report indicates a financial move. Proceeds from the issuance of convertible notes, bringing in $225 million. Convertible notes are a type of debt that can be turned into stock later on. They're also spending money on buying back their own stock, around $47 million, and paying dividends of $4 million. The company is required to report on its leases. They have leases for office spaces in America, Asia, and Europe. The leases are non-callable and expire on various dates through July of 2027. A10 Networks invests its cash in various marketable securities, which are classified as available for sale. These include corporate bonds and US Treasury securities. The total fair value of these securities was about $112 million at the end of March. A10 uses derivatives to manage risks from foreign currencies. Some of these are designated as hedging instruments, while others are not. For the ones not designated as hedging instruments, they experienced a net loss of $24,000. Meanwhile, the hedging contracts amounted to $14.5 million. There was a small acquisition of ThreatX Protect, which cost A10 Networks $19.6 million. Most of that was recorded as goodwill, around $13.8 million, because the value of the company's reputation and assembled workforce was hard to measure. A10 Networks issued $225 million in converted teeth. They will pay interest every 6 months, starting in October of 2025. The notes can be converted into cash, stock, or a mix of both. This added a new long-term liability to the company. Lastly, it looks like the General Counsel Scott Weber set up a trading plan to sell off a small number of shares sometime in May, around 5,000 shares. Now for my analysis of A10, there's good and bad here. The company is bringing in more money. That's the good part. They're also expanding their security products. However, they're making less cash from operations and paying higher costs for things. That's the bad part. A10 is paying more for its own operations, while the profit and gains on income stayed pretty much the same. Also, there's a risk because much of their revenue comes from very few customers. So it's like relying on a few big sales instead of many small ones. So while A10 Networks is growing, the risks have increased. So you need to keep an eye on them. Alright, that's our breakdown of A10 Networks' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. See you next time.